Good morning, and welcome to TOPIX Japan Market Radio for December 1, 2025. I'm your host in Tokyo, and this is our daily briefing for global investors tracking Japanese markets. We're here to break down the key moves in equities, currency, and rates, with insights you can actually use. Joining me is our portfolio manager who focuses on Japanese macro. Let's start with the snapshot. How did Japan trade today?
Thanks for having me. It was a fairly rough session across the board. The Nikkei 225 closed at 49,303.281, down 1.892%. The TOPIX fell 1.158% to 3,501. The Mothers Index, which tracks smaller growth names, was down 0.282% to 2,124. Even the J-Right Index dropped 1.386%. Finishing at 2027.5. On the currency side, dollar-yen fell 1.012% to 154.703, so we saw meaningful yen strength. Gold in yen terms rose 0.287% to 15,700, and crude oil gained 0.51%, trading at 59.14. Overall, it was a risk-off tone with the yen catching a bid.
That yen move is probably the headline here. Let's dig into what drove it. The big story overnight was a signal from the Bank of Japan hinting at a possible rate hike in December. Markets reacted immediately, the yen strengthened and Japanese government bonds sold off sharply. Can you walk us through what this means for investors?
Absolutely. This is a significant development. The BOJ has been signaling a gradual shift away from ultra-loose policy, and a December rate hike would be another step in that normalization process. What happened is straightforward. The central bank's language suggested they're growing more confident about domestic inflation and economic conditions. That led traders to reprice the yen higher and push JGB yields up, which means bond prices fell. For Japan specifically, this matters because it represents a fundamental change in the policy backdrop that's been in place for over a decade.
Right, and that policy shift has implications across asset classes. Let's start with equities. How should global investors think about Japanese stocks in this environment?
Near term, it's likely to create some pressure. Higher rates typically compress equity valuations, especially for growth-oriented sectors. Financials might benefit from a steeper yield curve and better net interest margins, but that's often offset by broader market concerns about tighter financial conditions. Corporate borrowing costs will rise, which can weigh on margins. We saw that reflected in today's Nikkei and TOPIX declines. Longer term, if the BOJ is hiking because the economy is improving, that could be constructive, but the initial reaction tends to be cautious.
And on the currency side, obviously the yen strengthened today. What's the mechanism there?
It's all about interest rate differentials. When the BOJ raises rates, the gap between Japanese yields and US yields narrows. That makes the yen more attractive on a carry basis and can trigger unwinding of carry trades where investors had borrowed in yen to invest elsewhere. We also see repatriation flows as Japanese institutions bring money home to take advantage of higher domestic yields. Today's move to 154.703 reflects that dynamic. If the BOJ follows through in December, we could see further yen strength, which would be a headwind for exporters.
Exporters being a big chunk of the Nikkei, that's a critical point. And you mentioned JGB yields rising, what's the outlook there?
JGB yields are repricing higher as the market anticipates the BOJ's next move. Longer duration bonds are particularly vulnerable because they're more sensitive to changes in policy expectations. If the BOJ does hike, we'll likely see further upward pressure on yields, especially in the 5 to 10-year part of the curve. That's a big shift for investors who've been used to negative or near zero rates for years. It changes the calculus for everything from corporate financing to household savings behavior.
Staying with the risk-off theme, there's another development that's affecting sentiment globally. Bitcoin dropped below $86,000 at the start of December, signaling broader risk aversion. How does a crypto sell-off like this ripple into Japanese markets?
It's an interesting transmission channel. When you see sharp moves lower in risk assets like Bitcoin, it often reflects a wider pullback in risk appetite. For Japan, that typically means a few things. First, safe haven flows into the yen, which we're already seeing today. Second, pressure on Japanese equities, especially in cyclical and export-oriented sectors. Third, Japanese investors who have exposure to crypto or related tech firms may start to rotate back into domestic assets.
So even though crypto isn't a huge part of Japan's equity market directly, the sentiment effect is real.
Exactly. It's less about direct exposure and more about the signal it sends. A sustained risk-off environment tends to weigh on the Nikkei and TOPIX because those indices are heavily weighted toward global cyclicals, automakers, industrials, tech exporters. If investors are nervous globally, those names underperform. On the flip side, JGBs benefit as investors seek safety, which pushes yields lower. But today we have competing forces. Risk-off supporting bonds versus BOJ repricing pushing yields higher. That tension is creating some volatility.
That's a really useful framework. Now, shifting to geopolitics, there's also been an escalation in rhetoric between Russia and NATO. Russia criticized NATO over remarks about preemptive strikes, calling them irresponsible and escalatory. Japan is obviously not directly involved, but does this matter for Japanese markets?
It does, indirectly. Geopolitical tensions like this tend to have a few effects. First, commodity prices, especially energy, can spike on fears of supply disruptions. Japan is a major energy importer, so higher oil and gas prices hit the economy through the trade balance and corporate input costs. Second, risk sentiment deteriorates, which again supports the yen and pressures equities. Third, there's a broader strategic question about U.S. military commitments. If the U.S. is more focused on Europe and Russia, it could complicate the security dynamic in the Indo-Pacific, which matters for Japan.
So even though this is a Russia-NATO issue, the market implications flow through to Japan.
Correct. Today's session already reflected some of that risk-off tone. If tensions escalate further, we'd expect continued yen strength, pressure on cyclical equities, and potentially some bid for JGBs despite the BOJ repricing. It's worth watching because these geopolitical flare-ups can be catalysts for volatility, especially when they coincide with domestic policy shifts like the BOJ's stance.
Bringing it all together, it sounds like global investors need to juggle several moving parts right now. We've got the BOJ potentially hiking in December, risk-off sentiment driven by crypto weakness and geopolitical noise, and a stronger yen that complicates the export story. How would you summarize the outlook from here?
I think the key is to recognize that Japan is at an inflection point. The BOJ normalizing policy is a structural shift that will affect everything from equity valuations to currency positioning. In the near term, that's likely to create volatility, especially if global risk sentiment stays weak. The yen's strength is a double-edged sword. It helps consumers and importers, but it's a headwind for the big export names that dominate the indices. For global investors, it's important to stay nimble and watch the data closely. If the BOJ does hike and the yen continues to strengthen, you'll want to be selective about which Japanese equities you own. Financials might outperform, but exporters could struggle.
And on the fixed income side, the repricing in JGBs is something to watch as well.
Definitely. Yields moving higher changes the opportunity set for bond investors, and it also has implications for global allocation. If Japanese yields become more attractive, you could see flows into JGBs from overseas, which would also support the yen. It's all interconnected.
Well, that's a comprehensive look at today's session and the forces shaping Japanese markets. To our listeners, if you're tracking Japan or have exposure in your portfolio, these are the themes to keep front and center. The BOJ's December meeting, yen dynamics, and global risk sentiment will likely drive the narrative in the weeks ahead. If you found this useful, consider subscribing to TOPIX Japan Market Radio for daily updates. We'll be back tomorrow with another briefing. Thanks for joining us.
Thanks, and we'll see you next time.